I'm Priscilla Barrera with the Investing News Network, and here with me today is Adrian Day of Adrian Day Asset Management. Thank you so much for joining us today.
Well, thank you very much for having me.
So my first question for you is about the gold price, which we know was very sensitive to Trump-related news during the first half of the year. How do you expect Trump's instability to continue to impact gold prices for the rest of 2017?
Yeah, that's a good question. I think, in the first half of the year, we had a lot of optimism that President Trump's economic policies would work to revive the U.S. economy. That obviously would be, good for the economy, good for the stock market, but a lot of optimism. That optimism is definitely fading. And as that optimism fades about the ability to even get the program through Congress, let alone what effect it'll have, as that optimism fades, then I think you're going to see a little bit of negativism work into the economy, economic outlook, and also a little more risk, a little more sensitivity to risk in the stock market. That's positive for gold. So I think this instability, as your word, this instability going forward is going to be positive for gold.
Great. And what about Trump's impact on mining companies? There was a lot of optimism that he will make it easier for them to operate. Has that actually happened? And who has been impacted the most? Explorers, producers?
Well, no, that's a good question. I mean, the thing in the U.S., it's one thing for the president to say, I want this to happen, but of course that doesn't turn it into law. A lot of mining restrictions, not all, a lot of them are state, especially permitting, tends to differ state by state. So there is only so much a president can do. But certainly the president has already begun to ease restrictions on mining on federal land. We've certainly seen, we've seen the Keystone Pipeline approved, which falls into the same broad category. So I think on that basis, he's definitely a positive for mining companies, but it's only part of the equation because of the low state and local difficulties in permitting.
All right. So would you say that we will see more impact in the future?
I think so, because these things take time to work through. Just because a restriction's lifted on mining somewhere doesn't mean you immediately open a mine. It takes time to work through. But yeah, it's definitely a positive. It'll work through over time. Yeah.
And we know that the Federal Reserve rate increases have also impacted investors' sentiment. Should more interest rates increases really be a concern for gold investors?
No, I don't think so. And I talked about that in my speech this morning. You can look back in history at various points when interest rates have been moving up and the gold price has outperformed the increase in interest rates. Think back to the end of the 1970s. You weren't even alive then. Think back to 2004, 2006, 2 years in, when interest rates, federal U.S. interest rates went up steadily over time, repeatedly over time, and yet gold outperformed. What's important is not that interest rates are moving up. What's important is that real interest rates are moving up and are moving up in what appears to be an accelerating fashion, getting ahead of inflation. That's not happening at the moment. The Federal Reserve has raised rates, but the idea that they will raise rates meaningfully and significantly in the near term, by near term I mean the next year or two, I think the odds of that are extremely remote. The Fed is extremely cautious about raising rates too fast.
Right. And other geopolitical concerns, such as European elections and North Korea, were also impacting precious metals earlier this year. During times of economic uncertainty, what is the most important thing for investors to keep in mind?
Wow, that's a big question. One thing I've noticed, I did a little work on this. One thing that you notice with geopolitical events, you need obviously an important geopolitical event. The more it affects the U.S., the more impact it has on gold. But also, two other things are important. It has to be a continuing impact, not just a one-off. And the most important factor I saw, the most important variable, is that if gold is already going up and there's a geopolitical event, think back to the Iran hostage situation before you were born in 1980, that had an enormous effect on the price of gold. But if gold is in a bear market, think of the first Iraq war, sorry. The US is over there in so many countries, I sort of forget which ones we've invaded and which ones we've had. Sorry, I'll take that back. So think back to the first Iraq war, when gold was in a bear market, and it had very, very minor and short-term impact on the price of gold.
Right. And there's a lot of positive sentiment around precious metals for the rest of the year. Are you bullish on gold? And is this still a good time to invest in gold stocks?
Oh, absolutely, absolutely. I mean, anytime you look at any asset class, you have to look at it in relation to its own history, its own price history, its own valuations, but also in relation to other assets. If you look at gold relative to the stock market, the broad stock market, so gold versus the S&P, we're at 10-year lows right now. Then if you look at gold stocks relative to gold, you see we're at a 10-year low of gold stocks relative to gold, and also on a valuation level, on many valuation metrics, gold stocks are not at the lowest they've been in 10 years, but they are much, much, much closer to their lows on valuation basis than they are even to their averages, let alone their highs. So I think this is a very good time for people to be investing in gold, and an even better time to be investing in gold stocks.
And aside from gold, are there any other commodities you like this year?
Yeah, absolutely. I mean, silver would be one. Silver is often called gold on steroids. So if we get a strong short-term move in gold, we're likely to see an even stronger move in silver. I use silver more as a trading vehicle, though, than a long-term investment. And the other commodity I'm very bullish on is copper. Copper, the demand for copper has gone down over the last 5 years as China's economy slowed. But at the same time, production went up because of new mines that came on in 11, 12 when the prices were higher. And those mines were already on the blocks, they were already in development, they were put into production, and then the price fell. So you had oversupply and underconsumption. Looking ahead, however, it takes an average of 10 to 20 years for a copper project to come into production. So the reality is that today, in 2017, you can look ahead to 2022, and you can say with virtual certainty that there is not a mine that's going to be producing in 2022 that we don't already know about today. And when you look at the mines that we know about today, all of them have potential problems. Resolution is a good example, a huge mine in Arizona. But Rio's been looking at that for 7 years now, trying to figure out what the optimization is. Can it be mined? Can it make money? So, and there's other mines like that around the world, or other deposits, I should say, like that around the world. So when you look ahead to 2022, you see the depletion in the big century-old mines in Chile and elsewhere that are depleting and beginning to deplete quite rapidly. Escondida, the largest mine in the world, I think. You look at Escondida, you look at how the head grades have gone down by about 70% over the last 10 years, and production has gone down significantly along with that, correspondingly. At the same time, as these old mines go deeper and deeper and deeper, the ground gets more and more unstable. So again, we've seen that in Chile in the last 5 years. Chile is obviously a very well-established copper producer, but over the last 10 years, we've seen increasing stoppages because of rock falls and water table floodings. When there's an earthquake, it disrupts the mine. That's because they're so deep. As you get deeper and deeper, you're going to have more and more of that. So production goes down, grades go down, instability increases. At some point, you close the mine, as Codelco has done with several of its mines. So anyway, you're getting a shortfall, you're getting a reduction in some of the old mines. You don't have the new mines coming on. And so 5 years out, there is a shortfall from current demand levels. Forget about any recovery in China or any new uses for copper in electric cars and so on. A lot of people don't realize electric cars take a lot of copper. But forget about any new use, just for current consumption and projections on future production 5, 6, 7, 8 years out, and we have a shortfall. So I'm very bullish on copper.
And what are your suggestions for maybe more conservative investors? How can they profit in the current resource space?
That's a good question because, in a lot of different areas, whatever it is, tech or consumer goods or whatever, if you want to be conservative, you typically buy the bigger ones and think. But in the gold mining space, the irony to me is that many of the well-financed, sound exploration companies are actually more conservative than the big miners, because mining is an extremely difficult, risky enterprise. So for conservative investors, I would say, and you don't get away from that risk by simply buying a basket of seniors. If you buy 10 lousy companies in one basket, you've still got 10 lousy companies. You've just got a lousy basket. And I'm not saying they're all lousy, of course. But for conservative investors, my number one pick would be a stock like Franco-Nevada. Franco-Nevada is a royalty company. So they don't have the same risks that a mining company does. They have a super strong balance sheet. They have diversified assets. They have about 40 producing royalties. They have about 300 non-producing royalties in the pipeline, so you have a lot of exposure to higher prices, but in the meantime you've got a really solid company, I think, with very low risk.
And finally, can you share with our audience what are your top stock picks in the junior mining sector?
Oh, that's more difficult, and I'll tell you why. Because I feel very comfortable recommending Franco-Nevada to people that I haven't seen, and they may not hear from me for another year or two or more. I know someone's not going to come up to me and beat me on the head because I recommended Franco-Nevada. The problem with juniors is you can make a very valid recommendation. It's a very good recommendation based on risk-reward, but things change. And so with that caveat, let me think of some of my top picks in the junior. I think Evrim, EVM on Toronto, which is a joint venture company operating primarily in Mexico, but also in British Columbia, with 3 joint venture alliances at the moment, well-funded, excellent company, well-disciplined, very disciplined company. They don't spend a lot of money. At 23 cents, it's an absolute steal. I would put that as a very good company. And that, frankly, is one I don't think anyone will coming up to me and beating me on the head for that one. A second one in the junior space would be Riverside. Riverside RRI on Toronto, trading around 35 cents. Don't chase the stock price. It's moved up about 4 cents this week, so don't chase it. But 35 cents, 36 cents, very good buy. Again, a prospect generator. They're focused entirely or almost entirely in Mexico. Again, well-financed, $5 million in the bank, very low spend. They're set monetary-wise for several years. So I like that one. And then a bit of a speculation would be MedGold, which is MED on Toronto. That's trading around 20 cents. They have a large land package in Serbia, which is to the west of the Bore Trend, where the big 1,000-year-old Bore mine operates, but also where Reservoir Minerals had their huge discovery a couple of years ago at Timok. This is to the trend to the west, much less developed, so a lot more risky, because we don't know for sure that the mineralization is there. Primarily gold, silver, by the way, not copper. But they have a joint venture with Fortuna. So Fortuna is spending all the money for MedGold to explore and come up with and generate prospects. Fortuna has the right to pick 2 of them, and then whatever else they find under this program, MedGold gets to keep. So again, I think they're about to drill right now. They're first drilling right now. If they hit, I think the stock will do very, very well just because it's so thinly traded. But that is much more risky. I have to advise you, much more risky.
Thank you so much for joining us today.
Well, thank you very much for having me.